Do you believe that investing in Tesla stock will allow you to retire soon? Tesla stock is one of the hottest growth stocks today. Many have shared how confident they are that they may be able to retire early just by investing in Tesla stock. If you wish for the same thing, you definitely would not want to miss this. According to experts, investors shouldn't obsess about a company's progress over just a 3-month period. Still, many watch quarterly results as they help detect trends and can confirm or refute what stock analysts have been saying about a business's prospects. One of the many closely followed stocks is Tesla, which has just recently released its Q3 financial result report. Amidst competition that is ramping up and several other headwinds in the industry, Tesla just gave investors another good reason to think about buying its stock. Tesla reported earnings of $1.05 versus 99 cents per share adjusted expected, based on analysts polled by Refinitiv, and revenue of $21.45 billion versus $21.96 billion expected, per Refinitiv. Tesla's net income GAAP for Q3 2022 reached $3.33 billion, with automotive gross margins holding steady at 27.9%, exactly where it stood in the second quarter of 2022. During the same period last year, Tesla reported $1.62 billion in profits. The automaker had an operating free cash flow of $3.3 billion last quarter and increased its cash balance to a record $21 billion. Moreover, Tesla executives addressed a broad range of questions during the said earnings call, including macroeconomic concerns and CEO Elon Musk's pending takeover of Twitter. Musk also talked in detail about the company's plans for the much-anticipated Tesla products like the Semi and Cybertruck, as well as the 4680 cells and FSD. That said, investors are more optimistic that investing in Tesla will really allow them to retire early. In fact, Tesla shares are up more than 50% in the last quarter of 2021, and the company's market cap has grown to more than $1.2 trillion despite some recent hiccups. A $1,000 investment in November 2020 would be worth around $2,940 only after a year, representing a return of 193% according to CNBC calculations. So if you had invested in Tesla in the said year when the stock was worth just over $400 a share, you would have nearly tripled your money. Go back a few more years and your return would have been even greater. On November 2, 2016, Tesla was traded at around $38 per share, so a $1,000 investment then would have grown 3,025% and be worth around $31,286 in 2021 alone. Over the same period, the S&P 500 index would have given you a 142.4% return. If you had invested in Tesla in 2011, you would have had a 5-figure return. Over those 10 years, Tesla went from selling just the Roadster to offering models S, 3, X, and Y. It has also announced the Cybertruck and Tesla Semi, but has remained non-committal about launch dates for both vehicles. A $1,000 investment in Tesla in November 2011 would be worth over $204,000 now, with the stock's price increasing from $5.74 to $1,229 over the years. That's more than a 20,000% return. A similar investment in the S&P 500 would have given you a 357.4% return. Of course, that is not to say S&P is a worse investment. In fact, most experts, including legendary investor Warren Buffett, say it's the best place for most people to put their money because it holds every stock in the index, making it automatically diversified. Still, it is undeniable that Tesla has had periods of dips, and there is no guarantee there won't be more. However, experts predict the anticipated dips in the future will be minimal. And there is a question that begs to be answered. How many shares should you have to retire in a few years? According to a survey, an average person needs around $1.7 million to retire while maintaining their standard of life. Assuming that Tesla stock ranges around $2,000 by 2027, you will have to own 850 shares by now to retire by then. That much is about $600,000. With the current Tesla stock price, investors can only hope that Tesla lives up to its high expectations. Go to Moomoo to see exactly how Tesla stock will perform. Link in bio. By now, Tesla has arguably made a name for itself in the industry, and based on its performance, it appears like the EV company will continue to perform well. For this reason, Tesla may just be a good retirement plan in the not-so-distant future. Many Tesla bulls believe in the company's vision of a cleaner, more environmentally friendly planet and want to retire rich as loyal Tesla shareholders. According to annuity.org, the median American retirement income is around $47,500, which means one will need at least $4,100 per month to retire comfortably in a Western country such as the United States. Meanwhile, those who live overseas or plan to retire in a foreign country, then you could retire with a lot less money. Many Americans choose to retire in foreign countries such as Panama, Mexico, Costa Rica, Portugal, or even Thailand to take advantage of geo-arbitrage and stretch their retirement savings much further. However, assuming that you prefer remaining in your current country and need at least $4,000 per month to retire comfortably and want to retire by 2030, then the minimum amount needed should be increased to around $50,000 to adjust for inflation. Using a standard 5% withdrawal rate, you will need at least $1 million to generate $50,000 per year in retirement income. If you continue spending 5% of your retirement savings, then your money will last you 20 years if you earn zero additional income once you stop working. Today, the EV company is doing its best to prove itself successful, both from investors and critics alike. In fact, Tesla has a lot of innovative projects lined up. One of them is Tesla's plan to build a sports car and use that money to build an affordable car, then use that money to build an even more affordable car. Alongside that is their plan to provide zero-emission electric power generation options. Tesla also plans to transition into an artificial intelligence and data company. After all, Tesla CEO Elon Musk has repeatedly stated that Tesla will be thought of more as an artificial intelligence company than anything else. The company has been focused on solving real-world AI and more recently introduced the Optimus humanoid robot on AI Day. Additionally, according to ARK Invest, Tesla's prospective robotaxi business line is a key driver by contributing 60% of expected value and more than half of expected EBITDA or earnings before interest, taxes, depreciation, and amortization in 2026. Across the simulation set, they expect electric vehicles to constitute 57% of the company's revenue in 2026, although at substantially lower margins than the robotaxi revenue. Also, business remains robust for Tesla as well. Some investors have worried about demand destruction as EV competition swells globally. But in the recent earnings call, Musk stated, "I can't emphasize enough we have excellent demand for Q4, and we expect to sell every car that we make for as far in the future as we can see." That's exactly why the company has spent billions to build its 2 new manufacturing facilities in Texas and Germany, as well as upgrading its Shanghai plant. That China plant now has the ability to produce 1.1 million vehicles annually at full capacity. It closed in on that run rate with a monthly record of 83,135 units in September. The company has also said its energy division, which includes battery storage and solar rooftops, has more demand than it can supply. Sales from that division represented 5% of total revenue in the third quarter. Experts believe that the company is performing well, even as it faces supply chain and logistics headwinds. Tesla produced 22,000 more vehicles in the third quarter than it was able to deliver due to shipping bottlenecks. Customers will take ownership of those vehicles in the fourth quarter. That issue could cause 2022 deliveries to miss the company's 50% annual growth target, but it does expect production to still hit that level of growth. Although valuing stocks alone is difficult enough at the best of times, it's a lot harder in Tesla's case. On one hand, there's excitement around the company's long-term growth projects. On the other, there's the near-term debate around Tesla meeting its production aims in 2022 in the face of supply interruptions and COVID-19 related shutdowns in China. The great news is that Tesla shares will appreciate in value over time if the business remains strong, so your money won't run out for a long time. Investing in Tesla stock is probably the smartest idea at the moment for investors who want to stop working by 2030. Subscribe to this channel for more Tesla stock content.